presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man Al in Homosassa. What's going on, brother?
Isn't it wonderful? I went ahead and invested in your Tiger dollars, and I went ahead and got the gold report for a year, and also your morning your call letter and stuff like that. And I got over a 50% return in one day, not counting everything else. But I just want to thank you. Tom's not perfect, but he tells you how to put your stops in, and he keeps your losses small. You can take your small losses, but then all of a sudden you'll be like Dave Rhodes, and you'll hit a home run. I mean, a big home run. Yeah. And put the money in your pocket.
Okay, brother. You're awesome, man. Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. September is here. Market-wise, let's take a look at it out here. We have the Dow Industrials down 628, NASDAQ off 542, S&P's off 113. Gold contract down $4.90, trading at $2,522 an ounce. We have silver trading down 76 cents, $28.38 an ounce. Late sweet crude getting hit, down $3.30. Well, everything's getting hit. Down $3.30, trading at $70.25 a barrel. Notes and bonds. 10-year note up 15 ticks, trading 114.01. The 30-year up a full point plus 3 ticks at 127.06. And King Dollar right now. Where are you, baby? There we go. 1 second. Where are you? We hiding. Yeah, okay. Come on. Oh, there it is. King Dollar trading up 160 ticks. 101.813. The euro's at 110. Yen is at 145. British pounds at 131 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world and the world of the S&Ps? Let's take a look at them. What do you have? Well, first, let's do the E-minis. So this has been a down day all day, folks, okay? And percentage-wise, where we stand right here is that you have the Dow Industrials off 1.5, the S&Ps are off 1.9, and the NASDAQ is off 3%. We take a look at the E-minis first. I'm going to do this intraday. So we take a look at this baby. You're at the lows. You've been at the lows all day. Bottom line is, I suspect they're going to keep selling this thing, man. That's how this shakes out, I know we're down a lot already, but guess what? When you get selling that comes in, particularly on a retest, bottom line, it's going to get down there. The real question is going to be how fast do we get down there? Now, the cool thing is, which I brought up last week, is that the faster that you get down to the bottom, the more likely that is going to be the bottom, that you're going to get a test of it. So in this particular case, it's a nice setup for the aspect of the test with lighter volume and a rejection of price. That's how this is shaking out right now. We take a look at the NQs, they're getting smoked. There's no doubt about that. And when you take a look at them, right now you're down 577 ticks. You're already by its strength. The numbers you got to watch in the NQs are going to end up being 18,390. That's the first one, 18,390. Now, that's the high of the low. That's what that is, folks, okay? But if we go straight down, I suspect it's going to be the high of the low that will get tested. We'll see. If we get down for a few days, then go sideways, then all bets are off, man. Then you're talking a whole different number, man. Because the going sideways move would end up being the building cause for the next leg down. We go to the gold contract. We take a look at gold. Gold's holding up well. For bottom line is that where we are in the market. Now, my take on gold, if you get the gold report, is that we're still going lower. I think we have another failure on our hands here. We're going to have Tim Ward on We're going to Basil and Tim on today, which is awesome. Bottom line is that what gold has just done is that it got in the lower range. Anything under 25.37 is the lower range. So, we went to 25.04. It did reject that lower price, but when you come down like we're coming down in the market, folks, okay, they throw everything out. That's the real bottom line. We go into the note and bond market. We take a look at the note and bond market we have out here. You get a 0.5 point up inside of the 10-year. And, this is a good number today. It's 218,000 contracts. That's what you need. It's been oscillating back and forth in a big way. Now we need some follow-through still. That's the real bottom line. We haven't had the follow-through. This has been going sideways since we had that spike high at 115.19. So now we got to get to the dollar, because my take is that this dollar looks to me that number one, the market can't stand it. Number two, because we came down so fast and so far, it's pretty easy to do a 0.382. Now, 0.382 of the whole move is 102.702. And right now you're at 101.809. So I expect we're going to get there, and we'll see whether we do the 61% retracement. Now, it'd be pretty easy to do the 61% retracement because of the fact that is also where ICE is set up. And if that's what we get, that's going to coordinate with the market down into those lower levels. That's how this thing is set up. If we take a look at some of the higher volume equities out here, it's pretty intense, man. You get NVIDIA down $10. We have Advanced Micro off $11. Let's do it this way first. Let's go into the NDX, because you're going to see these big numbers here. So inside the NDX, you have, look at that, on semis down 9%. You got Constellation, the brand's down 9%. Clack's down 8.7. NVIDIA's down 8.7. Dexcom is up 4.8. You have PepsiCo up 2.3. Inside of the Dow Industrials, the strength versus the weakness, point-wise. Okay, so you have United Health putting 62 positive points, Procter & Gamble 18, Visa 13. Taken away from it, big numbers. Look at this. Goldman minus 142, Caterpillar minus 105, Boeing minus 88. Let's go look at Boeing for a second, man. This is just amazing what has happened with Boeing the last 5-6 years. It really is. So we take a look at Boeing. Yeah. Oh, here we go. We're breaking lows again. And you're going to break them with volume. So check this out, man. Boeing just blew away August 5th, folks. That is a problem. That is a little problem child, man. Blew it away. Let's see what else we got out here. Meaning it's inside Boeing. Stay right there, folks. Got that man, Mr. Basil Chapman, coming up. We have the Dow. The Dow Industrials right now trading down 596. You get the NASDAQ off 533. S&Ps are off 109. We'll come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. The Dow's trading down 615. You get the Nasdaq off 548. S&Ps are off 112. Let's get over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the hour. And don't forget, folks, Basil has an outstanding show here every trading day, 10 to 11 Eastern Standard Time. Also has a great newsletter, The Opening Call. Now, it's very easy to get the Opening Call. Come over to our website at TFNN. Go into newsletters. You're going to see it on the left-hand side, the second one down. You just hit the Opening Call. You hit that subscribe button. You can get the Opening Call for 1 month for $149, 6 months for $695, which is a savings of $199, or 22%, and 1 full year for $1195, which is a savings of $593, or 33%. Now, they all come, folks, with a 30-day money-back guarantee. Basil's a great newsletter. He also has approximately 14 archives out there, so you understand how he looks at the market every day and how to ride that Chapman wave. Basil Chapman, what's going on?
It's not what's going on, it's what's going down.
Yeah. That's for sure. That's a fact.
So, it's so interesting. Look, we've got this. Look at this left side chart. This is the Dow daily. The middle is the weekly chart, and on the right is the monthly chart. So because we made that high, all-time high on Friday in leg C, you remember I think we spoke on Thursday because we couldn't do Tuesday, so we did Thursday, and I mentioned to you that in the Chapman wave methodology, we try to identify the lowest low bar, count each successively higher peak. When we get to a leg B or just after leg B, if there's an upgrade from a buy signal to a buy mode of the chart, it doesn't matter whether it's a 1-minute chart or a monthly chart, the implication is that it should go to at least 4 higher peaks, alphabetized sequence A, B is the next, peak C is the next, leg D, and then peak D is the following one. Well, it's very interesting because in the Dow, we got to a leg C with that move on Friday to 41,585. And I said to subscribers, we've got to be careful. We're only expecting one more peak, and then other things can happen. Doesn't mean to say it could, but this week coming up, that's the week we're in, I said I'm anticipating some kind of a pullback. So the selling that occurred this morning, almost from pre-market, yesterday was kind of almost an unchanged session, but today just started straight away. And we haven't had any let up at all. And what is really important about this is that the 9-period moving average, this green line, is still way above the 14. That so far is very bullish. So to get that green to go pink, in other words, to go under the 14-period moving average, which would be very negative, you'd have to see a slide to about 40,500 or less, and it has to be very quick. And I don't know what provoked the selling But the fact that it started just the very first trading day of September, kind of when everyone's back at work, although I'm sure people were at work throughout the summer, but maybe much lighter, tells me that I've got to monitor this very carefully, because it seems to me it's a little bit programmed, because I still have the technicals here that are good. Like the MACD is good. Relative strength did pull back, but it's still pretty strong. Stochastic's still at 88%. I mean, that's fabulous. I love 88% when we're long, and we are long. So, and the on-balance volume was a little bit overbought, and the weekly chart is still very good, and that's in leg C. So I'm watching this very closely, because it's very seldom, especially when you're going to new highs, that the chart will fail at a C and not go to at least a D. So that's where we stand right now. But what's very interesting is, there's a rotation going on. And some of the financials, for instance, our Bank of America, which we are still long, I typed that in the wrong place, let me put it over here, is still holding pretty well. And I think it's really important, at least as the way I see the market, that the financials hold up. It's not great, but it's holding pretty well. It's only down 15 cents. And in the healthcare, I spoke to you about that healthcare stock that we've got, SOLV. Solventum Corporation is in the healthcare industry. It's a spin-off from Triple M. I said we were anticipating, and when we went long, that it should go to 4 higher peaks to a leg D, and it should hit the 200-period moving average. It's done all of that, and even today, it's down 31 cents. If you put that together with, say, United Healthcare, which is also holding very well, it's up $9.74 at $5.99, almost $600. If you put it together with GE Healthcare, what I'm saying is that there's a rotation going on, and how that rotation unfolds over the next week is going to be important. So you can see here's GE holding well. Even we've rotated into this telephone. Look, AT&T. I know AT&T goes back for you decades.
Oh, my Bell, that's right.
your mom worked for AT&T.
That's right.
And look at this. It's at, what's fascinating? Even with that split, you remember it was like 1981 or 82 or 3, something like that. They were forced to break up. And then even with the breakup, look, they're still in the run. They're still holding very well. Anyway, today they're up 3%, 2.29%. Right. So it's a rotational market. And if everything was going down, I'd say, we've got a problem. So I'm looking at this and I'm saying there's still residual strength, but I am anticipating that it was going to be this week that I was looking for some kind of a pullback. So even if the Dow had to find enough strength to make a nominal new high, I think we're in this phase in September that's going to be very choppy, very selective. And as I say, some of the positions we have are working out. Some of they're probably going to hit stops. But we had raised cash. We put that cash to work, and now we're going to start raising some cash again. But the way I'm looking at it, I still think there's a chance that the Dow goes to above 41,585. I think it should be this week, but we've got a shortened week. But we'll see how the way the market is right now. Obviously, this is a really important session. But if tomorrow
it's
we have...
It's going to definitely take some work, that's for sure.
Yeah.
Because we're down a lot more than Europe and Asia was. We'll see if they follow us, tonight. So.
But in a sense, but we're also down for... it isn't like interest rates spiral to the upside. It isn't... there is an external event here. So I'm just wondering if this isn't just something where people came back to work and said, hey, let's raise some cash. And that's going to be very important. I do see some weakness coming up, but I still see some inner strength based on my technicals, my 9-period moving average, even in the S&P, which is also down sharply. Look, SPX.X, there we go. Look, the S&P, sharp move down, but that 9-period moving average is above. Now, I've been talking about the QQQ as being weak because the semiconductors are weak. There you can see some different thing altogether. That's the reason why I think the upside now is limited, but we've got this rotation going on. If you can pick the sectors that are holding well, I think that's very important. Look, here's the QQQ. Look at the SMHs. They've really been struggling. They only had about a 61.8% retracement from the high 283.07 in July, slumping down to 200.49, and then and today the 9-period moving average for the first time in about 2 weeks went negative. So I think it's very selective And that's how I'm trying to treat the market. I don't mind raising cash because I think there are a lot of really good symbols that we haven't got in that I'd like to get in on a pullback.
Yeah, well, if you look at the SMHs, I mean, we're down 17. The SMHs are only 7 points away from the highs of the lows. So that's pretty intense.
Yes, and it's got this pattern that I call the dreaded H, and I suspect that if the 200-period moving average of 218 is taken out, we will test that 200 level, yeah.
So, folks, come on to our website. It's really easy to get Basil's newsletter. Just go to TFNN. Newsletter's at the top. It's right on the left-hand side. Basil, you have a great one, safe one. We look forward to the show tomorrow.
Thank you, Tom. You too.
Stay right there, folks. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Now trading down 580. We get the Nasdaq off 555. The S&Ps are off 112. Let's get over to our man, Mr. Tim Ord, as we do every Tuesday and Thursday. And don't forget, folks, you can reach Tim every trading day at ord-oracle.com. That's ord-oracle.com. Tim Ord, pretty wild day starting off September.
Yeah, it's kind of a lot of cross currents here. Let's look at chart 1. Let's look at the short-term pattern.
Okay, I have it up.
We're up over the last couple of weeks. We're up holding against the previous highs of July 16th, but we never touched that high. And on Friday, if you look at the volume chart, we really had high volume showing kind of like energy going to bust through that high. And today we gapped down, and leave an open gap. So, and if you look at the bottom window, the first part of actually mid-August, the S&Ps were making higher highs, and the SPX VIX ratio is making a lower high. So that was a bearish divergence suggesting they were making some sort of a high. But over the last week or so, the S&Ps made a higher high, and that ratio made a higher high. So I didn't really get a signal of any consequence. I thought we'd get a pullback, but I'm not really trusting it here. There's a gap around that 545 on the SPY, and obviously we may try for that. We're not very far from it. But, I don't see any top of consequence. High volume highs, just like almost high volume highs, almost always tested. So if we pull back here, which we are, we may test that gap below us at 545 and go right back up and test the gap that was formed today. So I think it's just more of a trading range. I don't think, anything.
So you don't think we're going to go after the high volume low that we have?
Today?
No, I mean, you're saying you're looking at the gap at 545, but the high volume low on the SPY is 523 to 510.
Oh, that one way. Well, I don't think we're going to go there, just because I don't think we have that much bearish stuff in the market. I don't think.
Okay.
At one point, I thought, we'll go back down there. But you ever look at gaps? Depends where they form. And a lot of breakaway gaps coming off of bottoms, don't get filled.
Okay.
And but the middle gaps and the gaps after the breakaway gaps, a lot of those do get filled. But if you ever go back and do a study, and if you see a breakaway gap off of the bottom, everybody waits. Well, let's wait for the pullback to that gap. Well, it never happens. That gap just stays open forever. And a lot of these bull markets start off with a breakaway gap. So, 520 could get hit.
I get it. You're looking for the gap in the middle. I can see the gap in the middle. I can see that. Cool. Okay. Yep.
So, but so I'm thinking that's a breakaway gap. Let's flip to chart 2 here.
Okay, I have it.
We've gone over this before. Back on July 10th, I'm kind of just pointing out some things that you got to really keep in mind. I thought at one point we were going to look like, the top window is the daily RSI for the SPYs. And if you hit between 80 to 85, that's never the final high. If it gets above 85, a lot of times that's an exhaustion move to the upside, and that's a meaningful top. So you get up around 90 on the RSI, it's going into a blow-off top. But it stays below 80, between 80 and 85. You can get consolidations, but ultimately you'll pull back or maybe just build a sideways range, and ultimately you start breaking higher highs again. And that's what we had on July 10th. The market did go back up. Now we're pretty close to the previous highs of July. We're in that vicinity. And I'm thinking we're not going to do what we, at one point, have that 2 boxes there, red boxes on the SPYs.
Yes.
If you look in the 2021, I thought we might do something like that. I don't think we're going to do that. I think the worst case scenario now is we fill the gap at 545, and I bet it finds support. The trend's not blowing out yet. It is. It's as we're talking, we're at 1.22 right now, which is pretty good, and we got 800 downtick readings. So we're already getting panic right off of the top. And normally, the tops, everybody think, well, this is a pullback. you don't get panicked until you get closer to the low, but panic's right off of a top on the trend. A lot of times, they're short-lived. So I'm thinking the worst-case scenario is 545. I bet we find support, and I bet I end up with a buy signal.
So let me ask you this.
There's a lot of things between now and then, but
sure.
I'm leaning more bullish here than bearish. I'll put it that way. So
okay, let me ask you this. We know the Dow hit a high on Friday, right? The Dow also did 1.684 billion shares on Friday.
Yeah. Yeah, well, it's kind of like what the S&Ps did. If you look at the S&Ps or SPYs there, look at that big chunk of volume. It's about almost 100% higher than the previous days before it. So
right.
I'm thinking that wasn't a blow-off, especially as it's going into a 3-day holiday. Volume's supposed to be anemic.
Yeah,
so
exactly.
It's a little bit of a it's a little bit of a twist here is what's going on. So I seen that volume kind of come in on the close. I'm thinking, maybe we're going to bust above the July high. Turned around and, we bust below. We were busting down a little bit. And today's volume is, it may not even match Friday's volume. So
no, it doesn't look like
I
it's
don't
going
know.
which is intriguing. I know what you're saying, man. There's no doubt. Yeah, especially in the
Qs.
Qs.
A little bit.
I mean,
I'm glad I'm not either long or short. I think, they caught the longs on Friday, and they may catch the shorts this week. So
yes.
So I don't know. A lot of weird stuff happens, the summer doldrums and stuff back and forth. You get these moves out of nowhere that just end as fast as they start. So, I'm not really bearish here, but, let's just go look at chart 3.
Okay.
Chart 2 says, we're going to hit a new highs at some point. In chart 3, this is kind of a repeat again, but you got to remember this Zwag breath thrust indicator, when you get triggered, which we did this year, we had August 5th to August 19th, we had the reading go from 0.4 to 0.62, which is basically 10 days, and that triggers a Zwag breath thrust indicator. Bragg thrust indicators only show up in bull markets. So, you can have pullbacks, but they're not going to be extended pullbacks.
Sure.
So,
stay right there a second, Tim. We got a quick break. We're going to be coming right back. This is Tim Moore, Tom O'Brien. We do appreciate you growling a problem with us. Stay right there, folks. Tim and I are coming right back. The Dow's down 700. Nasdaq's up 593. S&Ps are up 128. Tim and I are coming right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks, at Tom O'Brien. We do appreciate your growling and prowling when it's out here. We have the Dow down 745, Nasdaq's off 613, S&Ps are off 132. They're selling this thing down fast and furious. And if we actually take a look, you'll see the you talk about a trip, Tim. I mean, the VIX is going right through the moon now and has been since we've been on. Bottom line is that we just went from like 17 to 20. So pretty intense. So we're on chart 3 right now, Tim.
Let's flip back to chart 1 again. There's different indicators, I guess you might say, to find out where panic is, and VIX is one of them. And if you measure the velocity of the VIX, put an RSI with it, and compare that RSI with other bottoms and stuff, because VIX, acceleration of the VIX is actually showing panic.
Right.
And so if the VIX gradually goes up, you're not really panicked, but if VIX really shoots up fast, that's the panic everybody's trying to get to the door. It's kind of like the trend, getting 1.2 or higher. And so the acceleration of VIX is another form of panic. And on top of that, we're down 2.3 or thereabouts on today's decline. And there's another axiom out there that 2% declines come in clusters. So if you see one, at some point you're going to see another one. So what that says to me is, it's going to be a kind of a difficult market. So if the market rallies from here, it may come back down again one more time. So, but I'm not really, Barry, I really didn't get a decent type signal on this last high. So I'm thinking we're not. I think this is going to just shake the tree a lot, and as far as a trend goes up or down, I think we're not going to. I don't think we're going to go all the way down to 520. I think we're going to find support in that 545, and we may hit it, rally off of it, and come back down to it. The reason why I say that because 2% declines come in clusters. So
I'm with you, and then you get the NDX down 3.4, which is pretty intense.
It kind of reinforces that idea. So I don't know. I'm not. I don't know. I'm not chasing the decline, but I don't see the bigger. Put this way, if you bought here, you have some pain, but ultimately you'll break the new highs. So maybe this is what the market's setting up to do. To they shake the tree hard enough, get everybody on the wrong side of the fence, then out of nowhere the rally starts, and I think that's probably what's starting to form here. Cool. But in a nutshell, I'm bullish intermediate term. On a short-term basis, tough call. So, but again, I really didn't get a sell signal at this last high. Not saying I get catch all highs. I don't.
No, I'm with you.
I didn't really.
We had that divergence. That divergence was basically the VIX TLT ratio was given a signal. And that seems to be pretty accurate. Right.
Which one was that?
Your ratio, the
SPY VIX ratio.
Yeah, no, the SPY TLT ratio. The bond ratio.
Oh, the TLT. Yep. Bond ratio.
Right.
Yeah. Well, it didn't quite get to the RSI didn't quite get to 70 on that last rise there. It looked like about 69 or so. The SPX tilt ratio works really good at bottoms, and it does pick out tops, but sometimes they're just short-term tops. So,
yes.
But bottoms, they usually pick out most of them. So,
yes.
I don't know. We want to move on?
Yes, I'm on chart 4 now.
Yeah, chart 4. This is kind of it's a trend indicator. Even though we're down 3.65%, that's it's almost the norm anymore for the GDX. It's up, down, just a bunch of percent. But I took this earlier today. It's updated to current time. The bottom window is the GDX 50-day average of the up-down volume. So it basically it's a trend falling type indicator and follows the up and down volume, which pretty much matches what the GDX has done. And we're up around close to plus 10 when I took this. So it wasn't even close to zero. As long as it holds above zero on this indicator, there's an 18-day average that has to hold above minus 10, but the 50-day average has to hold above zero. When it came in about plus 10 earlier today, so even whatsoever going on here, I think it's just chop. So far as the trend indicator, as long as this thing stays above zero, which is I think it got above zero, I think end of March, 1st of April, and pretty much stayed above zero. So it's been 4 months now, 5 months, 4 months,
Yes.
5 months, whatever. So far as this indicator is not showing any weakness yet, per se. Let's go to chart number 5.
Okay, I have it.
Chart number 5. This is kind of a good indicator to pick out the intermediate terms, because in longer-term uptrends, which I think we are, and I'll show you that chart after chart for number 5, is this pretty good chart to pick out the intermediate term. In the middle window is the weekly HUI gold ratio, and it gets pretty close to the tops and bottoms intermediate term. This indicator gets RSI of this weekly ratio gets below 30, usually at a low. This happened back in October of last year. I didn't mark it. But when it gets above 70 RSI for this ratio, usually at an intermediate term high, and all those red arrows in the past, I've marked it. We're coming in about plus 60, a little less than plus 50 or 59 right now. So momentum to the upside as far as this HUI gold ratio on a weekly time frame hasn't reached euphoria yet. So this has probably got this stuff in at least on GDX today. To me, it's not worrisome. I'll put it that way. I think the uptrend's still intact. It's nothing significant to worry about. But chart number 6. Okay. This is a chart that once it gives a signal, it stays on a signal for at least a year. The average or the shortest Durrell relation on here is a year and a half, and most of them can do more than that. Matter of fact, the last time we gave a signal was like January 2021, and it flipped to a buy signal here in June of this year. So it may stay on a buy signal until late 2025, but you may have some intermediate term sell signals in between there. And that's the reason why I brought up the weekly RSI on the HUI gold index. It may give a sell signal maybe in, I don't know, November, December of this year, and that sell signal may last until February, April of next year. But the bigger trend remains up. As long as those two indicators on the bottom remain above the mid-Bollinger Band, the uptrend should continue. And so bigger trend's still up. So short-term trend still looks fine.
A beautiful thing. Well, listen, man, we appreciate the education. We look forward to having you on Thursday.
All right. Thank you, guys.
Tim. Have a safe
Talk
one.
to you then.
Thank you so much.
Right.
Dow's down 740, Nasdaq's off 615, S&P's off 132. Come right back, folks.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow's off 726, Nasdaq's off 604, S&Ps are off 131. So let's go look at the SPY first, okay? Bottom line is that there we go. We have volume out here of 47 million. You know, the gap that Tim's looking for, I mean, that's going to be right next to us. That's only down $6. So we're going to know this pretty quick. You know, you got an expansion of volume. You know, bottom line, my take is we're going to the lows. You know, at least the highs of the lows. We'll see how this shakes out. We look at the NDX, same type of setup. You know, the NDX, if we look at the SMHs, you're almost there. So in the NDX, you're down 15 and 15.25 in the Qs. You get another gap on the Qs at 454. Right now you're at 461. So the 454 would line up with Tim's 545 if that's what you're looking for. Bottom line, the highs of the lows are 442. And the low is 423. The gold contract's holding up. That being said, you know, I mean, there's nothing like a divergence, man. And right now, that thing has me nervous. I can tell you flat out. Even though we've been staying at the highs, I don't like this setup, man. You're down. We went to 2504, and we had 264,000 contracts. To me, that's too many contracts, and the roll is on. So we'll see how this baby's going to shake out. We go to the let's go to the volume inside the NY. No, inside the comp. And volume inside the comp is 5.1. So we're probably going to do, 5.8, something like that. This one here, though, the volume to me inside the NYSE on Friday, that's an anomaly. 1.684 billion. That, to me, is bearish, actually. You go back and hit it, but that's bearish to me. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night, a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 a.m. Great show, folks. Look at him, folks.
Building